Hi, I'm Bogusz Kasowski and this is Macro Point of View Commodity News, a new show based on fundamental information supported with technical analysis to better understanding commodity markets around the world. So let's start with China and zero COVID policy that was recently loosened up by cutting 2 days of quarantine for the people that had a contact with infected people and also incoming travelers to China. This is not what market expected. Market was widely expecting to completely lose or at least making a significant cuts on zero COVID policy in China. China government claimed that they will not lose the whole zero COVID policy, but in sake for their own economy, they have to make some sacrifices like this. It's a small step, but it was expected on the market, and recent days, especially on copper, it was available to see on the copper market, and now we can see some retracement. So let's take a look on the charts and let's talk about the most commodities, main commodities on the market, and let's see how this macro point of view commodity news find out on the market. Let's go. So let's begin with copper as we start the whole show with copper. So what we can see, it's a moving up recently, especially based on those zero COVID changes in China. But what also was supporting this movement was a weaker dollar after CPI reading from the last week. So together it created this movement from 7,500 to 8,700. Today we had some retraction, we have some correction on this market, so I secured this small area because how I get this small area that is secured here, and it's based on a Fibonacci retracement, and it depends. If we start putting this Fibonacci retracement on the whole movement starting from the mid of September till today, and it creates the bottom here on almost 8,400, on $8,379 to be exactly, and the currently movement start at the end of the October till today, which is the top of this small box at $8,418 on this next contract on copper, next contract on American copper, because it's probably most available contract for the people on the globe. So as we can see, this price is now reaching this zone. This zone might be the first small correction in the total up movement, because as you can see on this daily interval, we have the bigger Fibonacci retracements that it's starting in March in the top price from Ukraine-Russian war, with the bottom in July 2022, and we are now this price at 8.5 thousand is 38.2% retracement. So we are in a nice correction, so it's highly possible that the copper market will hit 9,000, which is on 50%, as we can see it here, and this movement should continue. So the small retracement after this high movement, after this changes to zero COVID policy, creates some profit claims and create a down bar. So after this down bar, I'm thinking that from this zone we should recover from the next few days and try to reach 9,000 in the next 7 to 10 sessions. So at the end of this week or maybe next week, we should be very close to 9,000 to reach 9,000, so it won't be so bad at all. So this is my copper idea, and also supporting for the copper, supporting on this price is that the CPI, low CPI, is also supporting. In the next few days, we will also probably see some explanations from Fed officials in United States saying that the aggressive rising rates is not so necessary. So this should also support copper as main industrial metal. The bad thing for copper is that LME, the London Metal Exchange, said that they will not forbid Russian metal incomings. It mostly focused on aluminum and nickel, but also it will also hit some copper. So this is the bad news for the copper price, as LME won't self-sanction itself. It also claimed that if there will be any sanctions posted by United Kingdom, as United Kingdom is no more part of European Union, so they need their own set of sanctions, or maybe there will be some sanctions from United States. But United States with Russia doesn't push so hard as they push world to sanction Iran or Venezuela, or in some parts China. So with sanctions coming from the United Kingdom government, the LME has no choice and will ban Russian metals, industrial metals. But without it, the LME said after a month of consultations that they will not ban Russian metal. This is bad for the prices, but it's in general good for inflation, because it will not rise in inflation, especially that aluminium supply 6% is from Russia, nickel supply 7%, global 7% is coming from Russia. So it's very important that those two metals plus some copper will come easily to main London Metal Exchange. If not, they will be probably redirected to Shanghai Futures Exchange as a main commodity market in Asia, but so far LME is still part of this Russian metals movements. So it's bad for the prices, but it's good for general CPI, so it also could have a natural impact on these prices. So as I said, I expect rising to 9,000 in a very short notice. With the gold spot, I also added some Fibonacci retracement, a big one. The big one is from the top on April 2022, with the bottom here in September. That was also bottomed in October and November, so we have triple bottom here on the gold. It's spot prices, it's not futures. I also make this frame, and between this 1700 and 1950 we were in those price range for the very long time, back to, as you can see, September 2020. So this frame was showing that this market was very high for a very long time. I know it's $250 range, but for 2 years of it, it fits that it was very large consolidation, and without the war in Ukraine we probably won't go above it. So for this market I created this small Fibonacci here from the recent bottom and the recent up that was on Friday, the recent highs, and I added the small line of 750 as its first psychological support. On many commodities we can see that the round numbers 9,000, 800, 8,050, 8,500 at least, or 16,000 or 1,600, those round numbers are working perfectly as a bottom or top for very often in those commodities market. So here I put this small line at 750, but after those large rise, because it's from $1,615 to 1,772, it's a large movement. It's a $150 movement up, almost undisturbed, because we've got a small stop here and here, so it's two small stops, so some retracement is almost necessary. And some profit taken probably will hit this. We can see this down bar of today creating right now, and probably United States won't change it. That this down bar will be going down. 1750 is minimum going down probably today, and tomorrow might continue to 1735, and then we bounce and start moving up, because we've got still high CPI, but the Fed rates probably will slow down rate hikes, so this should be expected as support for the gold prices around the world. So this is what should we expect in the next few days, especially if some Fed officials will get out and start saying that this is what we are expecting right now, as the CPI in the United States, it's lower than 8%, so this should work perfectly. Let's take a look on the wheat, and today the agro commodities will be covered only by wheat. So we've got this wheat futures going down recently. We are under the SMA 55, so it should be counted as a downtrend. But what I can say here on this market, it's that probably the United States Agricultural Department is not fully appreciate the problems around the world. Recent World Markets and Trade reports shows some small changes in the wheat market production expectations for the current season 22-23, and I think they underestimate the problems in India, where some commodities traders say they expect 95 million tons of wheat production in this season, while government and USDA say it will be above 106 million tons. 106 million tons, it's a large number. 95 million tons, it will be very low number for the India economy. India already stopped exporting wheat. They also expect to move some strategic reserve of wheat, which is very low. And the beginning of October, the strategic reserves in India about the wheat was 22.7 million tons, which was over 50% lower than October 2021. So they don't have much space to move to lower the local prices. So it's highly possible that India will stop taking duties around 40% on imported wheat. So it might change that India will stop exporting wheat and become an importer of wheat in a situation that they have lower production. That's the main problem, and at the moment we are expecting that India will create problems. Also, we have problems in Australia, which has some flooding problems. And last week there were still some fields with water still on the field, so it was unable to fully predict the damages made by the flood, as it's still ongoing event. Second thing, we had some very bad recent season ending at China, because we've got also some provinces with floods and some provinces with very dry conditions with drought. So with both of those conditions, we probably expect much less than 135 million tons of wheat produced in China in the current season. So this is another thing. Also, United States Department of Agriculture doesn't fully cover the lower expectations of wheat in Argentina. The Argentina export at the moment by Rosario Grains Exchange said they will be dropped by over 50% to 7 million tons. So it's 7 million less wheat on global market from one country. So it's another country that's supposed to export a lot of wheat, because 14 and especially 14.5 million tons that was exported in 2021-22 season was large number. If it's gonna drop to 7 million tons, it makes adding Argentina to the list of getting to the growing list, because we've got already cut in export from Ukraine due to war, and we don't know what will happen this week if this agreement between Russia, UN, Turkey and Ukraine will be extended, on which grounds and how it's gonna be extended. If it's gonna be extended, we don't know it yet. Also, we've got Ukraine with the export problems, we've got India with export ban, we've got Australia with flooding problems, and we've got probably China with home production that will increase import. So all those lists are now supported by Argentina cutting their wheat export expectations in the season 22-23. At the moment, the wheat production in Argentina by Rosario Grains Exchange is predicted for 11.8 million tons. By the Buenos Aires Grains Exchange, it's predicted to 12.4 million tons, and it's already dropping around 2 million tons from the previous forecasts by those grains exchanges, the main grains exchanges in Argentina. So the problem is very serious and should support wheat up to 950 or 1,000 US cents per bushel. So this is what I expect for the wheat in the midterm. It probably will take a couple weeks, maybe even after the New Year's. So it might happen in January, but I keep my long exposition for the wheat, my personal account, so I'm still very supportive, as I think USDA is not fully appreciate those bad conditions around the world that will hurt wheat production during next few months, and we still don't know how it's gonna be winter in Europe, when we've got France, Poland, Romania as a main winter wheat production. So those countries might have currently very warm weather, which supports wheat, but if those winter wheat will go too fast and then will come very low temperatures without the snow to help cover those winter wheat fields, there might be also a huge problems. But this is a big if. But what we know for sure, India, Ukraine, Argentina and Australia are 100% problems for the wheat market, and for my opinion this price is too low for supporting these problems. I will quickly jump to coffee market, as recently coffee start sliding down from very top, 242, almost 243 cents per pound, and we are now dropped to 160. I predicted those 160 in my other shows, currently made it in Polish, so I won't keep saying this, but this price might drop more. Why? Because so far we've got very good weather forecast for Brazil that will support coffee market. We've got recession incoming that creating demand, lowering the demand for coffee, as we will start spending less money for the coffee outside our places. So Arabica, which is this coffee market futures, will lose for in favor of Robusta type of coffee. And the last stand for coffee recently was very low ICE stocks of coffee. It was 21st century lowest coffee stocks recently, and now what we can see, it's a rebound. It was almost 80% lower than last year. Now we've got this week rebound by 66,000 60 kilos bags, and that makes reduction to 75% lower than last year. But as we know, there is almost 100,000 bags incoming, already awaiting certification in ICE stocks warehouses to probably be added in the next 2 or 3 weeks. So the coffee market probably didn't reach their bottom yet, so we can expect that we'll get lower than 150 or even 140 cents in the next 2-3 weeks as the new shippings will reach ICE warehouses. Unless, of course, there will be some weather change, especially in Brazil or in Vietnam or in India. But at the moment, there is no such information to have those weather changes. And also, any recession news will support those dropping price on coffee. So this is the coffee market, and a quick jump for crude oil, especially Brent, and it's here. As you can see, I created some zone that this price is moving since mid of October, so soon it will be almost a month when we've got mostly all the time we are inside this $5 zone between 92.5 and $97. We've got those little spike up, but as we can see, we'll go back as usual. At the moment, also Friday price rise up to almost $97. Today we also start falling from, after rising to $97, we start falling today. So it's highly possible that we'll reach $93 or even 92.5 in the next 1 or 2 sessions. This is something that based on a power of dollar combined with OPEC news and combined with recession fears around the world. A zero COVID policy loosen up might spike a bit those fuel price, those oil prices, but also Thursday and Friday, just right before those information from China was rising, now we are dropping, so it's probably not yet that we can expect spike up to $100. So what I expect is really about $2-3 drop in the next 2 or 3 days. Purely technical, as there is no main fundamental news that might change this market planned or expected in the next 2 or 3 days. So this market at the moment will be very easy to play by technical rules. And at last I will show the natural gas contract, the next contract in United States, and the main information that I will be keep telling all over again and all over around each shows that the NatGas prices in United States are completely separate from the Asia or European gas prices. Why? Because United States at the moment has a capacity of less than 14 cubic feet export capacity, as they have no more terminals to export more. So they're already exporting as much as possible, especially with Freeport LNG terminal still closed. So this is all in prices. Whatever the price in Europe or in Asia is, the prices of natural gas, the export of natural gas in United States, it's not possible to rise above those 14 BFCD. That's why this is completely separate market. So analyzing those markets, we should focus on the news from the United States. So I will show you one thing because it's very, very interesting. Last Friday, as we've got this 7% drop in 1 hour, in less than 1 hour even, because there was recently we've got some issues with Twitter and Elon Musk buying Twitter, changing some rules about it, those accounts with the blue label on it, blue sign of being official, create a mess on a very many companies in the United States, and not only, like Lockheed Martin. And due to some news showing up on this Twitter with the blue label on it, that was paid $8 to be a blue labeled and then changed name to the company name or something. There was also some fake news that there is some cracks found in Freeport LNG terminal that is closed since June after the fire. That there was some recently finding some cracks in the pipes, so it will be probably pushed another few weeks to repair those cracks. Freeport LNG said it's fake. They make a media claim that all those tweets and all those news are fake, but it was enough to create those 7% drop. So what can I say? This natural gas market is at the moment in United States fueled by two things: weather forecast and Freeport LNG terminal news. As we can see, simple, non-confirmed, non-official news can drop the natural gas by 7% in less than 1 hour. This is something we should keep an eye on it. So returning to daily, we can see that we are under SMA 55, so we should calling this a lower trend, falling trend, but we are still between $6 and $7 for over 2 weeks now. What can I say about it? The weather forecast is going to show the demand on a level almost 120 BCFD per day. It's 22% more than last week. Next week it should be even more, with 124.2 BCFD per. So it's even more, and it's showing that the colder weather is reaching United States. With supply of 98.6 BCFD, it's showing that they will start draining the warehouses. The warehouse level after the last news of adding some gas to storage, it's still 3.7% lower than 5 years average. And this number will probably rise next 3-4 weeks or even more if the cold weather will still be in the United States. So the weather is the main thing that will fuel the natural gas prices in United States on this futures market, plus Freeport LNG news, as we are reaching already mid of November when this Freeport LNG terminal should start. We've got already 3 ships awaiting loading there. There were 4, one was moved to Corpus Christi terminals, but 3 are still waiting, so there is a very high chance that in few days, maybe a week, there will be news that Freeport LNG start working and start pumping LNG to those ships to export them from United States. If not, the price drop is very, very expected. Even a sharp drop, especially if there will be official news from the Freeport LNG that this will be postponed to December or mid of December or even January 2023. So then we can expect about 10% drop. If not, we should not rise as much, as this Freeport LNG export is already in the price since a couple of weeks. That mid-November is the term that Freeport LNG will start operate. So this is already in price. Any news different, so postponing the export from Freeport LNG terminal, it will be price dropping event. Thank you very much for your attention. I hope my very first show in English won't make you scared of me. I'm pretty sure with more shows I will be better and better and better. Please subscribe, please hit the like button, please share this show to as much people as possible on social media. Visit macropov.com website. It's still under construction, but sharing the knowledge, sharing the news is the main reason, not technical issues on the website. Thank you very much for your attention. Have a good day and have only green investments. Thank you.